Hey everyone, welcome back to the channel. If you're into crypto, you know the landscape is always shifting, and right now, all eyes are on the US. Today, we're diving deep into the latest US crypto regulations and, more importantly, what they mean for you. This isn't just about headlines, it's about practical implications, so stick around because you won't want to miss a single detail. For a long time, the crypto world felt like the Wild West, right? Fast-paced, innovative, but also a bit unregulated. Well, those days are quickly evolving, especially here in the United States. Regulators are stepping up, driven by a desire to protect investors, maintain financial stability, and yes, collect taxes. This push for clearer rules is actually a sign of crypto's growing mainstream adoption, something we should all be excited about. But with that growth comes responsibility. And the government is definitely taking notice. Let's break down some of the key areas where we're seeing big changes. First up, we've got the SEC, the Securities and Exchange Commission. These guys are primarily concerned with whether certain cryptocurrencies should be classified as securities. If something is deemed a security, it falls under a whole different set of rules, like requiring registration and disclosure. We've seen them take action against various projects, arguing that their tokens fit the definition of an investment contract. This is a huge deal because it impacts how projects raise capital, how tokens are traded, and even how everyday investors can access them. The debate around what constitutes a security in the crypto space is complex, and it's far from settled, but their stance is definitely shaping the market. Then there's the CFTC, the Commodity Futures Trading Commission. While the SEC is focused on securities, the CFTC views certain cryptocurrencies, like Bitcoin and Ethereum, as commodities. They regulate derivatives markets, think futures and options, based on these digital assets. Their involvement is about ensuring market integrity, preventing manipulation, and overseeing trading platforms that offer these products. While their approach might seem less direct than the SEC's in some ways, their regulatory framework is crucial for the institutional adoption of crypto and for providing clearer guidelines for financial institutions looking to enter the space. Beyond these two major players, we also have the Treasury Department, specifically FinCEN, the Financial Crimes Enforcement Network. Their focus is squarely on preventing illicit activities like money laundering and terrorist financing. This is where regulations like the Bank Secrecy Act come into play. Crypto exchanges and custodians are increasingly required to implement robust Know Your Customer, or KYC, and anti-money laundering, or AML, procedures. This means verifying your identity, tracking transactions, and reporting suspicious activity. While some might see this as an intrusion on privacy, it's a necessary step to legitimize crypto in the eyes of traditional finance and governments, ultimately fostering greater trust and wider adoption. Now let's talk about taxation. Oh, taxes. The IRS has been clear for a while now. Cryptocurrencies are treated as property for tax purposes. This means every time you sell crypto, swap it for another crypto, or even use it to buy goods or services, it can trigger a taxable event. We're seeing increased efforts by the IRS to ensure compliance, including sending out warning letters to non-filers and collaborating with exchanges to obtain transaction data. Keeping detailed records of all your crypto transactions is no longer optional. It's absolutely essential to avoid headaches down the line. Tools and software exist to help with this, and I highly recommend using them. So, what does all this mean for you? If you're an investor, understanding these regulations helps you make more informed decisions. It can influence which projects you invest in, how you manage your portfolio, and how you report your taxes. For example, projects that are proactively working with regulators or have a clear path to compliance might be seen as less risky. On the flip side, projects that deliberately try to circumvent regulations might face legal challenges, impacting their value and longevity. For developers and innovators in the crypto space, these regulations present both challenges and opportunities. On one hand, navigating the complex legal landscape can be daunting and costly. On the other hand, clear regulations can provide a framework for building legitimate, sustainable projects that attract institutional capital and mainstream users. This can lead to a more stable and mature industry overall. Think about it. A regulated environment often fosters greater trust, which is crucial for widespread adoption. What's coming next? Well, we're seeing growing bipartisan interest in Capitol Hill for comprehensive crypto legislation. There are various bills being discussed, aiming to provide a clearer regulatory framework across the board. Some proposals aim to define digital assets, clarify agency jurisdiction, and set rules for stablecoins. Stablecoins in particular are under intense scrutiny due to their potential impact on financial stability, and we're likely to see specific legislation tailored to them in the near future. This legislative push is a positive sign, as it could bring much-needed clarity and certainty to the market, moving us beyond piecemeal enforcement actions. It's important to remember that these regulations are not static. They are constantly evolving, and what's true today might change tomorrow. Staying informed is your best defense. Don't rely on hearsay. Make sure you're getting your information from reliable sources. This includes following news from regulatory bodies themselves, reputable financial news outlets, and informed legal experts in the crypto space. Now, I know this can all sound a bit overwhelming, but please don't get discouraged. This increased regulatory attention is actually a sign of crypto's maturation. It shows that governments and traditional financial institutions are taking digital assets seriously. While there might be some growing pains along the way, the ultimate goal is to create a more secure, transparent, and fair ecosystem for everyone. This legitimization is what will ultimately drive crypto into the hands of billions, unlocking its full potential. So, what should your action plan be? First, educate yourself. You're doing that right now by watching this video, so great job. Continue to learn about the specific regulations that apply to your investments and activities. Second, practice good record keeping. This cannot be stressed enough, especially for tax purposes. Third, choose reputable platforms and projects. Those that prioritize compliance and transparency are generally safer bets. And finally, stay engaged with the conversation. Your voice as an informed participant matters. This journey is just beginning, and while the path might have more guardrails now, it's also becoming safer and more accessible for everyone. The future of crypto is bright, and navigating these regulations effectively will be key to participating in its incredible growth. I hope this deep dive was helpful in clarifying some of the complexities around U.S. crypto regulations. If you found this information valuable, please hit that like button, share this video with your crypto-curious friends, and subscribe to the channel for more insights and updates. Your support helps us bring you more content like this. And as always, if you have any questions or thoughts, drop them in the comments below. I love hearing from you all. Thanks for watching, and I'll see you in the next one.